questions, but it would love for this to be get some participation from others in the room if you have questions. So just raise your hand. Well, Adam, thanks for coming.
Thanks for having us.
Appreciate it. So maybe we just sort of start off with the recent results. Q1, I think you had, very good, strong year-over-year growth, steady gross margins. But maybe just sort of unpack, the quarter. Obviously, you're absorbing a lot of costs for the Neutron rocket, but maybe just sort of provide some of the highlights for the quarter, if you don't mind.
Yeah, sure. Yeah, so I think, Q1 is showing the strength that we have in the model, where it's a diversified business, right? Where, obviously when people think of Rocket Lab, they think of rockets, which, makes sense. It's our heritage. And we do have, the most frequently launched, small dedicated rocket in the market. We've launched it 48 times. We actually have another launch scheduled for this evening, where we're launching the second NASA payload in about, I guess, less than 2 weeks. So it'll be our third launch in the quarter. In our guidance, we pointed to 4 launches in the quarter, with potential for a fifth, but 4 was the baseline in our guide. And launch represents about a third of our revenue, maybe a little bit less than that right now, with Space Systems making up the remaining element of our revenue. So if you think of our business in 2 segments, you've got the launch segment, which is about a third, Space Systems, which is about 2/3, and within launch, again, we have the Electron launch vehicle that's launching today, and that's driving all the revenue there. But we're deep in the development cycle of a new, larger launch vehicle that'll compete directly with the Falcon 9, called Neutron, and that's currently scheduled to launch its kind of first test launch in the middle of next year. So, as you pointed out, I mean, it's driving our financials to a pretty significant degree, because it's a huge project. When we came public back in August of 2021, we said, Neutron was going to be roughly a 3-year development program and cost between $200 million and $300 million. And right now we're kind of still in that ballpark. Right now we're still targeting an overall program cost of around a little under $300 million. So it's a huge undertaking. It really does create a lot of distortions in the P&L, because that first test rocket is all just flowing through R&D, right? So it's really the model, will change quite a bit once we get kind of our first paying customer on that vehicle. And then you get the benefit of, absorbing those costs into COGS, and then amortizing a lot of the overhead that you've built to enable not only Electron but Neutron as well. So a lot of good things happen when we start to launch Neutron with paying customers again, which, right now, first test launch middle of next year, first paying customer, likely be within 6 months of that, the anticipation.
Great. And then maybe just sticking with sort of like a general view of the business, but sort of the demand environment. You mentioned sort of the split 1/3 Neutron, or 1/3 Electron, which is your current launch rocket today, and then 2/3 Space Systems. But maybe sort of just break out where you're seeing demand for either.
Yeah, there's very strong demand for both. When you look at the Electron launch business, that's really, we've got a pretty deep backlog. We have about $200 million of Electron backlog as we speak. Of our $1 billion of backlog, roughly, $200 million of that is launched. The remainder is on the Space System side, which we'll talk about in a little more detail. So you can think of launch as being generally a pretty lumpy business. It's dependent upon customers delivering their payloads to us on time in order for us to meet our targets for each quarter and for the year. So I would say that, it's one of those businesses where for example, if you look at revenue recognition for launch, although you're collecting cash against milestones as you progress towards the launch, you actually don't recognize revenue until you actually hit the intentional ignition to launch the payload for the customer. On the Space System side of the business, it's quite a bit more predictable. I think it'll become increasingly predictable, as we get some of these larger programs really kind of going in a meaningful way. For example, of the $800 million in backlog at the end of Q1, about the $800 million of Space Systems, probably $650 million of that $800 million is tied to large programs. So, for example, the biggest piece of that is a $515 million contract that we won with the Pentagon to support the SDA program, where we're the prime contractor for that. So I would say that the demand drivers, there's a lot of demand and not a lot of people to compete with us on the Electron side of things, because people that have tried to compete on the small dedicated launch side have largely failed. We've seen public examples of that with, the Astras and the Virgin Orbits. And then there's kind of similar situations in the private markets with small people who've tried to, with small launchers that have tried to enter that market. On the space system side, I would say that we're, there's more competition on the space system side. There we deal with, building full spacecraft solutions like we are for SDA. You're competing against large existing primes with the likes of Lockheed, Northrop, L3, and so forth. You also have some smaller satellite manufacturers in there, the likes of Terran and so forth, that are really subs to the larger government primes. So I'd say demand is probably, equally robust. It just has different characteristics. Again, more lumpy versus predictable. And the space system side really has a bigger TAM that you can kind of tap into, which, even within that space systems business, we have a combination of kind of ship and build type of, subsystems. And then we have more of the, over time rev rec, large systems or subsystems plays like with our solar business. And then, of course, you've got the much larger programs when you're delivering an entire satellite. But demand is very strong across all of our segments right now.
Great. And then maybe we'll stick within the space systems business. Maybe just talk about the order momentum. Obviously, you have right now, you're in the middle of the MDA Global Star program, but maybe just sort of talking about the types of deals you're working on, and then just, if you can, update us on the progress of where you stand right now with Global Star.
Yeah, so we continue to move up the food chain, going from, we were the subcontractor to provide the bus to MDA for the Global Star constellation. With the SDA with the Pentagon, we ended up being the prime. So we provide not only the bus, which for us is our own bus with a lot of vertically integrated supply of subsystems, and then we also procure the payload from third parties, and we've announced who some of those parties are that are providing payload capabilities for us. And on the MDA Global Star progress, so this year is that's one of the bigger revenue contributors. We were anticipating, or are anticipating, about $100 million of revenue from that program of a total of $150 million award that was announced a couple of years ago. And because really most of the revenue gets recognized as we start to put these satellites through their assembly, integration, and test, and start to deliver hardware to the customers. In this case, MDA Global Star. So I would say that it was our first major constellation award. So kind of there's been a little bit of fits and starts, and there's also some funding challenges of Global Star early on in that program. But I would say things have nicely come into focus, and we expect to continue to deliver under that program, with the majority of the hardware being delivered either by the end of this year or early 2025.
Okay, and that's that 100 million in reference of the 143 million of the contract.
Correct.
And that'll be throughout the year, and you're probably more so second half weighted or towards the end of the year.
Yeah, it'll peak in either Q3 or Q4 in its contribution, but it's significant. It was significant in Q1. It'll be significant in every quarter this year. But yeah, it'll be growing as we progress through Q2 or Q3.
And then final delivery is expected.
Yeah, I mean, we're already in a position to start delivering hardware. I believe we may have already shipped a couple of the satellite buses or parts of those satellite buses to the customer. But yeah, I believe all of the hardware really should be delivered kind of before the end of the first half of 2025.
Okay. And then that revenue stream will fall off, and then obviously then you're going to have the SDA award, which is 515 million, where you're acting as the prime there.
Mm-hmm.
Maybe just talk about some of the milestones on that as we think of that award as it progresses through the year.
Yeah, so these programs are pretty typical, whether it's a large commercial or a government program, where you make your proposal, you're awarded, and then you go through a series of engineering milestones. So you go through your CDR, PDR, different ways where you get the customers doing a final buy off on the system level requirements and how you're solving the requirements to get in hardware and software. And you basically we recognize revenue under large contracts like that under what's called EAC, or estimated cost to completion. So essentially, if you think about a program that has, let's say, just make some rough numbers here. Let's say it's a $500 million program with 30 points of forecasted non-GAAP gross margin, and so that would indicate you probably have around $350 million of cost. So as you're realizing costs against that total estimated cost of $350 million, you're recognizing revenue and gross margin at that kind of program level. So it's all about kind of getting through some of the key design reviews, but that's not where the majority of the money is spent. The money is really spent when you start procuring hardware and you start assembling spacecraft. So typically you'd see a program that would start off relatively modestly, and then it would peak as you're going to start delivering hardware. And that particular program will be delivering satellites kind of, by end of 26, kind of early 2027.
Okay. That and then the program, technically those are supposed to launch sometime in the 27 timeframe.
Correct. Yeah, launch has not been awarded for those spacecraft yet. So that's again where our whole model, where we're bringing this larger vehicle to market, Neutron, that ideally will be eligible to kind of throw its hat in the ring to not only build, where we're building the spacecraft, but also potentially launching it as well.
Okay. You can. It sounded like from the call you're going to have some revenues this year from the SDA.
Yeah.
What is that in reference to? And I'm assuming that's a smaller percentage, and that's probably more back half weighted.
Yeah, that's correct. I mean, we had a tiny little sliver of revenue recognized in Q1 against that contract, but I'd say kind of insignificant. That'll grow as we progress through 2024, and become meaningful in 25, and obviously 26 is where you'll have the majority of kind of that revenue recognized. I'd say 25, 26, and early 27. So really the model here is to continue building the backlog with those those meaty kind of big contracts, because we moved from before we got MDA Globalstar, we had some smaller contracts where we were building kind of one-off or maybe onesie twosies for NASA and other customers. And then we basically got our first small constellation order for a company called Varda Space that was doing in-space pharmaceutical manufacturing. And then we transitioned that up to our first major constellation, which was the MDA Globalstar, which was, like you said, 143 million. Then we followed up with more than 3.5 times bigger with the SDA contract. And we're continuing to put our oars in the water on similarly sized or larger program opportunities. So the goal is to continue building that backlog. And we've been successful in more than doubling our backlog year on year for the last several years. So I think our goal would be the same as try to double backlog if we can in 2024 over 2023, and continue that momentum. And as you do that, especially with these larger programs, that really starts to de-risk your revenue forecast even 2-3 years out, right? Which is a very nice place to be.
Right. Maybe then, if we could talk about the backlog. Sounds like there's a lot of opportunities you're tracking. You haven't announced anything yet, but it sounds like the team is working on a lot of opportunities. How does that, could it be sort of a same progression that we saw where MBA, you sort of put your toe in the water and it's a great opportunity, it sort of validated yourselves more so than what you've already done, but then the SDA really got you as a prime contractor. Is that sort of the level of types of opportunities and even greater that you're looking at?
Yeah, I mean, those are exactly the types of opportunities. And I mean, now that once you kind of are in that club of government prime contractors, a lot of doors start to be open for you that weren't there before. So there's a lot of classified work that we're pursuing. And again, just kind of if you look at a program like SDA, there's lots of tranches to come. It's a very big program, many billions of dollars. So it's now just a matter of kind of exceeding your customers' expectations on the first bite of the apple, and then hopefully good things come from that. On the commercial side, there are other large commercial constellation opportunities that we're also pursuing. So we're not just solely focused on U.S. government business, but there are other kind of commercial and foreign government opportunities outside of the U.S. government. So yeah, all of it kind of starts to build on itself. And we've been very, very fortunate. I just passed my 6-year anniversary with the company, and we were pre-revenue, and now to kind of be looking at the kind of programs that we've won and the very kind of bold programs that we're undertaking, like developing Neutron. I mean, the business has come much further than I'd even expected only a few years ago.
So it sounds like things have accelerated, and it's also accelerated because you've also demonstrated success.
Yeah, I mean, look, space is hard, right? So we got quite a bit of feedback when we slipped our Neutron schedule by a couple quarters when we did our Q1 call. And we're as frustrated as anybody with that kind of a slip. But in the grand scheme of things, when you look at programs that are in some cases more than half a decade late, and we start talking about a couple quarters on such a challenging program as something like building a Neutron launch vehicle, it's a, again, it's unfortunate, but it's not completely kind of out of school, if you will, with kind of what's in fact, when executing a program like this, we're doing things that have never been done before. So building a 13-ton launch vehicle from scratch, within 3 or 4 years for $300 million. I mean, that was never even contemplated as being possible. I mean, you look at the people that are trying to do similar things for orders of magnitude more capital. So it kind of goes to our whole capital efficient model where we do things differently because we have to. Because when you wake up every day and not only is your core business, fighting physics to put stuff on orbit, but also competing with the likes of SpaceX and Blue Origin and ULA, you're competing with people that have way deeper pockets than we do. So we have to do things differently, and kind of just it permeates everything that we do in the company to try to be capital efficient and just kind of outmaneuver our competition versus kind of out capitalizing them, because we'll never do that.
Right, right. Any commonalities between the Global Star MDA and sort of how you can apply that towards SDA and, think about the leverage of the technology, but also then where the, margins settle MDA versus SDA, where do those settle?
Actually, there's a lot of commonality. If we put a lot of, we had to kind of establish a base of IP to for this Global Star MDA opportunity, and we're leveraging a tremendous amount of that on the SDA program. And as we put our proposals in for other rounds of SDA and other opportunities, we'll continue to leverage that IP portfolio. But it was a pretty, we've gone through, obviously, better than anyone how tough these equity markets have been. So to kind of have two major R&D programs going on, one, of course, you're developing this key fundamental, space systems capabilities, and also developing Neutron at the same time. I mean, it was continues to be a very difficult thing to do in the kind of capital markets that we face. But we believe it's the right thing to do to kind of position the company to deliver some. I think we're going to be really attractive returns, but we kind of got to get through this investment cycle, and that also kind of informed our you look at the convert that we raised in February of this year. We raised $355 million. I mean, a lot of that capital is really earmarked to go do things to help drive the business to grow faster. So a lot of inorganic things, and we see a tremendous amount of opportunity out there in ways that we can grow the business faster and ultimately, get to our end strategic goal of being a true end-to-end space provider where, we can design spacecraft, we can manufacture those spacecraft in a very vertically integrated nature with all the subsystems that we build in-house. We can launch those satellites either on Electron or on Neutron. We can operate them on orbit because we do that today for customers, but then ultimately own our own assets on orbit, and create a recurring revenue stream off of those assets. And we've seen the power in that model, as illustrated by SpaceX, right? What they've done with Starlink. Starlink wouldn't be what it is today if they didn't have a launch vehicle, and specifically a reusable launch vehicle that really brings the economics into focus. So, we think having a launch capability is an imperative. It's an incredibly difficult thing to do. Maybe there's two handfuls of organizations in history that have developed reliable, launch vehicles, and we're now one of those. So if you have that capability, you're in a very strong position to go exercise applications on orbit that you think are particularly attractive because you've got something that other people that you compete with don't have, which is, again, access to space.
Right. Margins, it's pretty similar.
So, margins on the programs are in the same ballpark. I mean, if you kind of think about, if you look at our space systems business, there's a components business where we sell components and subsystems into other spacecraft manufacturers. People like, customers include Lockheed and Northrop and Airbus and other people like that. And, we have a portfolio that can have anywhere between, kind of call it sub 30% gross margins to 70% gross margins. On the space system side of things, it's, I'd say historically, people that are priming satellite missions would be very happy with high single-digit, low double-digit gross profit margin. We're different than that. Our aspirations are more towards the 30% or higher gross margin range for those, and we're able to target those because we're so much more vertically integrated than a lot of our competition. So it eliminates a lot of the margin stacking that can drag down the margins for people that don't have those subsystem capabilities in house.
Great. And then I don't think you've talked about Solero in any sort of detail in a little bit, but where do we stand with Solero? Obviously, that was an acquisition you made a couple of years ago, strategic in nature for the solar cells and panels, but you talked about a 30% sort of margin. Where are you at now, and what's the time frame on getting there, maybe?
So when we acquired that business in early 2022, it came with it, about, I think it was around $150 million of backlog. Around 100 of that 150 came from one particularly margin challenged program. And I would say that we're significantly way through that program, but there's still more, revenue that we've got to kind of flush through the system on that. And that basically it was a lost contract. That was something that was put in place again before we acquired the company. And so what we'd like to do is, there's been progress made on getting that gross margin up. When we acquired it, it was in the kind of high single digits. Now it's more solidly in kind of, call it in the mid-teens, kind of on when you look at it on a blended basis. But all the new business that we've really closed in the last, I would say, 2 years, that's all come in at or above our target 30% plus gross margin range. And we've accomplished that, through getting more efficiency by investing in the new reactors that are more efficient than the ones that were in place prior to the acquisition. So we're kind of rebuilding the fleet of reactors. We're putting more automation in place. We're bringing our costs down, which is helping obviously on the margin side. But we've also exercised, we think, quite a bit of incremental discipline on pricing and how we enter these long-term strategic supply agreements with these large, prime contractors who are much more comfortable operating in the low margin cost plus regime. We're not that. We're a firm fixed price, provider, and we kind of, we have very set targets of what our gross margins should be to return, kind of reasonable returns for our shareholders.
Great. Maybe we just pivot over to launch. You have you think you did 48 so far launches on the Electron rocket. You're the second most frequently launched provider. You created the separation, and we've seen a lot of these small launchers wash out in the industry. But you have so far you've launched 2. Maybe just sort of lay out the remainder of this quarter, which launches you have on the docket, and then sort of how the year shapes up. I know you had you talked about lowering potentially the initial guidance, but maybe just talk about how the year shapes out.
Yeah, so we launched 10 missions last year. This year we came into the year with a manifest of 22. We have seen some, like we always do, we see some manifest kind of, I'd say, kind of whack-a-mole going on where, customers will be late showing up with their payloads. And so, we can only launch a rocket when the customer shows up with a payload that's ready to go. And I'd say, look, all the customers unanimously want to get their assets on orbit as quickly as possible, but they really don't know till they go through their final kind of acceptance testing. Or you put the spacecraft in a TVAC and vibe environment and see, if something bad happens during those final tests. And when they do, it doesn't result in like a 2-week shift. It results in months or quarters because they have to deintegrate the spacecraft, remediate the issue, and then reassemble, retest. So it creates quite a bit of volatility. So, where you have some missions basically that slip to the right. Occasionally you have something that'll kind of pull into the left. But for the most part, there is some leakage that goes from period to period as customers underestimate the time it'll take for them to deliver their spacecraft to us, and that affects our manifest. So coming into the year at 22 launch is kind of confirmed on the manifest. That's going to be a number that's, in all likelihood below 20. This year comes down. It's really difficult to say with any precision even now, whether that number ends up being, 17, 18, 19, 20 launches, but it's kind of in that range is kind of where we currently see it. This quarter we have launched twice. Hopefully the third one goes off this evening, and then we've got another one teed up for I think it's another week or so from now. So it's a pretty busy manifest, but fortunately for us, we have 3 launch pads for Electron. We've got 2 in New Zealand. We've got one in Wallops Island, Virginia. So it gives us the ability to launch relatively quickly. We've done as quickly as, I think, 8 days of separation, and I'm not sure that that even is kind of a hard limit for us. Because we can pivot pretty quickly from now that we have multiple launch mounts, for example, in New Zealand and so forth.
Right. And then you mentioned the possibility for a fifth, but at this point where we're at right now, is that sort of not likely? And that's obviously not, it's not in the guidance, but you know, you talked about that as.
You know, as soon as we can get that payload in our hands, we'll kind of try to get it off as quickly as we can. So I just think we, out of, you know, I'd say out of now experience that we're starting, you know, you've been doing this a while now, and you can start to generate some pattern recognition, and we just, you know, we don't want to get too far over our skis on estimating, you know, launches in a quarter. So we feel very comfortable with the 4 that we gave with our guidance. The fifth kind of still remains on the bubble.
Okay. Maybe just on launch pricing. I think it's bounced around a little bit, and that's just because of sort of mix that you have. But where is the pricing today, and you know, how have they progressed, and how do you see that sort of in the next 12 or 24 months?
Yeah, so we've got customers where I would say a pretty wide range on pricing. And a lot of it is really dependent upon how much, like, for example, how much hand-holding the customer needs, how much mission assurance they require. And when I see mission assurance, it means, like, you know, how much support does a customer require before they sign off on the launch, right? Like some customers, let's say, for example, you know, a national security mission where it's a high value payload, they want to make sure that there's all the, you know, everything's been checked and double checked and triple checked, and they require special security on the range and so forth. So a lot of that stuff kind of influences price. Our average selling price is around 7.5 million for an Electron, but I would say that, you know, you've got, you know, people that can be, you know, I wouldn't say significantly, but somewhat below that number, and then you can have customers that are significantly above that number. We've got large customers where they're significantly north of, say, 12 million, 13 million, right, for a launch. Again, based on those unique requirements. Of course, you know, we're very much looking forward to getting Neutron to the pad, where, you know, average selling prices we anticipate are more like, you know, $50 to $55 million per launch. So it becomes much more meaty and chunky additions to backlog, and plus just, you know, the kind of revenue uplift that comes from that. So I'd say the pricing environment for launch right now has been pretty firm. I mean, we've been increasing pricing every year. I would say that a couple of years ago, when we were booking multi-launch deals, we had to go fairly deep on discount from our target 7.5 million at the time. Now we're kind of looking at larger multi-launch deals that are coming at much kind of closer to the pin. We're having to discount less from our kind of single launch kind of target pricing. So I think that's very comforting. So I think, you know, pricing has been very supportive. I think what's helped that also is the fact that, you know, our mix, where we've now introduced a new product into our portfolio called HASTE, which is our using Electron as a hypersonic test platform. And, you know, that's an example, again, where the mission requires a lot more mission assurance and a lot more kind of, I would say, additional service. The traditional just commercial launch would be, you're not just launching a satellite, you're basically deploying, you know, a payload and doing a lot more for that mission than just kind of, again, launching somebody else's stuff onto orbit. There's a lot more that goes on into those kind of missions. And so we charge accordingly for that.
Right. And maybe just sort of coming up on the time here, you mentioned HASTE. That was going to be, I think, one of my questions. But if we're thinking about Neutron and the delay you saw now, and I appreciate that you put in perspective of the other rocket programs that we've seen multi-year delays, and even Starliner still hasn't gotten up there. But what has that done in terms of, like, where you sit positioned for things like you know, the NSSL, you know, and also where you think you're going to be positioned to be bringing a rocket at a time when the market really needs set of that medium launcher?
Yeah. Well, look, I think if you talk to the customer base out there, they would say that Neutron's probably a few years late versus what they would like to see. So of course, you know, we had to gain access to the capital and kind of earn our way into going from, you know, small dedicated launch to this medium launch category. But if you look right now, there's actually a very significant imbalance between supply and demand for launch. You know, SpaceX has the vast majority of the market share today. You know, to their credit, I mean, tremendous execution, and they're the vehicle that was, you know, needed for national security and everything else. I think that when you look across a range of, you know, government customers, they need, you know, multiplicity, right? They need more than one supplier. The NSSL program is a path to do that. We were originally anticipating to be on ramp this year, but with the delays the schedule that pushes out to next year. But we think when the vehicle's ready, there'll be a very receptive customer in the form of the U.S. government. Even to the point where they've invested significant money in helping us develop the vehicle to meet their needs. So we had a $24 million kind of investment from the Space Force to help develop that upper stage of that vehicle. So they're very, very motivated to bring more competition and more capacity to the market. Because right now, if you look at between the new vehicle coming from ULA, the Vulcan, it's late. It's not currently on its intended schedule. Northrop Grumman and Tari's rocket was retired from the market because it had its dependence on the Russian-Ukrainian engines. So really, it's potentially a handful of providers into this market for both national security and commercial launch. And we're now kind of one of that elite club of people that are able to deliver against the needs there. So I think and the commercial market might even be more constrained, because if you think about programs that compete with Starlink, they're probably feeling a little bit nervous that they're having to rely on their competitor for access to space, right? With Falcon 9. So I think that once Neutron comes into market, there's going to be a lot of people that'll be able to breathe a little bit easier, including the U.S. government customer and commercial customers.
Right. Well, we've run out of time, but I appreciate, Adam, you joining us today.